Hi, I'm Nicole Urken, Research Director for Mad Money, and welcome to Behind the Scenes of the show. I'm here with Jim Cramer talking IPOs, always a very hot topic. Now, Jim, IPOs outperformed the S&P last year. People are excited about the performance year to date. This week we have Pinnacle Foods, which is supposed to price tonight and open tomorrow, and it's a name we highlighted earlier this week as being similar to a name we really liked on Mad Money, B&G Foods.
Right, well, it's right down to the pickles. B&G is a pickle company. This has Vlasic. B&G has Vermont Made. This one has Log Cabin. I was noting that when we were putting the pyramid of products together. These stocks typically would not be of interest, except for the fact there's a lot of people who think that the world is slowing. It would not be of interest, except for the fact it's going to have a very good dividend. The brands have been what's known as football, Nicole. I mean, periodically they've been owned by different companies. This is now a house of brands like B&G. The idea is you get a stock going. You can also pay down debt. They have a huge amount of debt. Normally, this would be an overlooked stock. I think it's going to end up being a very hot IPO when it comes tonight.
Yeah, you know, importantly, when we've looked at IPOs in the past, we've seen that investors like growth. Yes. Pinnacle Foods is not a growth name. It has a 4% yield. It has pretty steady growth. But one thing that they really highlighted in the IPO prospectus as I was going through was innovation, the leadership brands. And we've seen this in the staples space, from, for better or for worse, but from Kellogg, from General Mills, these names that are continually innovating in order to drive growth.
Look, if you look at Ken Powell, he's the CEO of General Mills. He did a major restructuring, took out a lot of costs, invented a lot of new products that take shelf space. So imagine the truck, you just throw in some more stuff, you take on more shelf space. Take on more shelf space, you're going to make square footage, you're going to do much better. What's happened is the raw costs of the grains have come down. Wheat's coming down. Corn's come down. The cost of the box for all these guys is a little too high, but the cost of the plastic very low. So you end up with the packaging and the gasoline perhaps coming down. These are the big costs. At the same time, Ken told us that the price cutting, the competition seems to be let up a little. All that plays into the hands of a company that has Duncan Hines, a company that has the Vlasic brand, a company that has very familiar brands that you will feel very comfortable with.
And similar to Cheerios with General Mills, 85% of households have a Pinnacle Foods brand. Even if you haven't heard of Pinnacle Foods as the name, you know the brand. So this is one to keep on the radar.
And I got to tell you, if it's going to yield 3.8, 3.9, people are going to come in and take it to 3.5. View this as a yield equivalent. Understand that General Mills yields about 3. General Mills, much superior company. But it's entirely possible that a restructuring at Pinnacle over time, pay down debt, will allow this company to grow faster, and they'll also have a currency to be able to buy. They will be up against B&G Foods. B&G Foods has not performed well of late, so maybe this is one people swap into.
A new name, as you talked about, a new name to come upon.
People want new names.
All right, Pinnacle Foods, watch out for it. Pricing tonight, opening tomorrow. Stick with us. I'm Nicole Urken, researcher for Mad Money. Stick with us.